Good morning, everyone, and welcome to another edition of Lender Chat. Today, we are chatting with Susan Moeller, mortgage broker, and we are continuing our discussions from last week about the fact that Austin is in a buyer's market, but interest rates are still kind of up there. So, what can we do for our buyers to help our buyers? And on the flip side, we're also going to throw in some things that are good for sellers to know what sellers can expect so that their houses will be looked at even in this high interest rate market. So, Susan, I'm just going to let you start.
Yeah, great. Thanks, Pam. A lot of really good discussion points that we can have in regards to that. Just kind of going based off of our previous discussions, just because interest rates may be high doesn't necessarily mean that it's not a good time to get into this market. And the reason for that is there's just a lot more availability of loan programs that you wouldn't have seen a few years ago.
And
There's also
inventory.
That's right. A lot more to pick from. Those really good houses that you really wanted to get into a few years ago, but was just near impossible. Those houses are readily on the market for you to move your family into. So again, I really think this is a great time for really anybody to get into that home, get into home ownership. If you're a new buyer or just looking to make a change with your family, we're going to discuss a few different options today in case you are still on the fence based on those pesky interest rates that are still higher than they were a few years ago. Have come down a little bit. Have noticed that since May, I've run some numbers today, in fact, and compared them to some scenarios that we discussed back in May. Rates are down about a quarter of a point since then, so there is at least some good news there. Quarter point, we'll take it, right? But if you're still on the fence and still wanting to see an even lower interest rate, just understand that there are options out there. The first and foremost, this is something I'm sure most people have heard about, and this is just a simple interest rate buy down. So this is your normal fixed rate that you would have. You basically are paying what's called a discount point to reduce that interest rate. That's your permanent loan rate. That's readily available at any time. And the bad thing about it is that you're having to come out of pocket even more for your closing costs. Of course, the upside is that you're going to have that monthly cost savings. You want to pay attention to specifically the number of months that it takes to recoup the cost for that interest rate buy down. But of course, that is something that is available to any potential home buyers for their consideration to get into a lower interest rate. But more specifically, some of the things that we're going to talk about today are what are called temporary rate buy downs. If you don't mind, I'm going to do a quick screen share with you to show some different scenarios that I've put together. So we have a few different options here that I've put together. We've got a 2-1-1-1. This is I've got S21, but that's meaning the difference is a lender paid versus, which is lender paid here versus seller paid. So we're going to discuss all of those different options here in this call. I'm going to start with the lender paid just because this is something that definitely was not available to the buyer a few years ago. You have what's called a lender paid temporary rate buy down. And I know that's a lot of words. So I really wanted to put together this visual so that your clients can take a look at this and see exactly what that means and exactly what the potential savings are here. Lender paid means exactly that. The lender is paying for this buy down for you. So this is provided by the lender. The prevailing interest rate in this scenario is a 7%. This is an FHA loan with just 3.5% down, so no high down payments. Of course, if you are able to come up with those higher down payments, potentially that interest rate may be lower. But just for the purpose of this discussion today, I just wanted to show what this looks like with potentially a down payment as low as just 3.5%. In this scenario, this is a $475,000 price point. I thought this was a great place to start because you can definitely find a really nice house in this market for 475,000.
I know of
After
one.
the Yeah, you have one right now. That's
Yeah.
right. I'm sure that's going to be gone anytime. But with just 3.5% down, your loan amount, which is just right here, that's after the down payment plus the FHA. There is a funding fee that FHA has. So just understand that going in with FHA. So you'll see that difference a little bit in that loan amount between the 475 purchase price and the 3.5% down payment. The starting interest rate in this scenario is this 7%. So what this is your permanent loan rate. This is your 30-year fixed. It is not a variable rate, not a variable rate. 30-year fixed, 7%. If you're going to consider this option, I think it might be useful in your mind to kind of look at this as a worst case scenario, if you will. The interest rate is 7%, so it is what it is. But in this scenario, if you notice here, in year one, the interest rate is actually 2% lower. So it's a 2% buy down in that first year, and your monthly savings is almost $600. Okay. In year two, this is 6%, monthly savings almost $300. And then by year three, here's what the monthly P&I would be, just with the normal interest rate, the 7%.
So P&I, just as a refresher, is principal and interest.
Yes, principal and interest. So this does not include your taxes and insurance. So make sure that you do take that into consideration if you're sensitive to your monthly payment, which most people would be, right? Yep. So yes, principal and interest. So in year three, it would go up to the 3102. So this is the normal monthly payment. But in year one, 2503. In year two, 2796 and some change. Ideally, by year three, rates will have come down and you can refinance, or maybe you're even going to sell your house within that time frame and you know that it's a temporary situation for you. That could be another situation. By year three, it would go to this 3102, but as long as those interest rates have come down, you're eligible for a streamlined refinance at any time. Very little documentation needed, just checking to see if you're making those mortgage payments on time. No appraisal, none of that. And ideally, at least in our belief, the interest rates will go down in that 2-year period. So you're getting all of this savings within that first 2 years. Mm-hmm. And so, so in year three, if worst case scenario rates are still stuck at 7%, well, you haven't really lost anything. You got the $10,000 in saving those first 2 years. Worst case scenario, obviously, you do definitely want to consider that when making this decision. But as long as the interest rates do go down, which we anticipate they will eventually, you just refinance it, get out of this 7% interest rate, get into the lower interest rate, whatever those prevailing market rates might be at that time. Total savings, again, over that 2-year period is almost $11,000 here. So Great. Quite a lot. So lender paid. So I'm going to move on. Now that we have a pretty detailed explanation of what that means, I'm going to move on just to compare to this seller paid option. Sometimes your seller is not going to be willing to pay for your interest rate buy down. Maybe they are, maybe they aren't. So you do have both options available. If your seller is willing to contribute, your cost savings in this example is around $10,000, just like the last example. The catch is that the seller has to cover that. So you have to get the seller to agree to a concession in that amount. So that's why I wanted to show both of the scenarios, lender paid option versus the seller paid. You will notice that the seller paid option, the interest rate is lower. So ways that you can accomplish that is potentially increasing your purchase price by the amount that you're asking for the seller concession so that you could get into this, so that the net to the seller is the same, so that you could get into this permanent interest rate of the 6%. In year one, again, 4% interest rate. We're wondering when we'd ever see those again, right? But here we go, 22, 26, about $570 in savings monthly. Year two, 5%. Close to $300 in savings for year two. Savings in those 2 years of roughly $10,000. You are still able to refi during that time period at any time. There is no prepayment penalties here. Normal FHA 30-year fixed can do the streamlined refinance. Worst case scenario, your interest rate is a 6% if for some reason interest rates have not dipped below that during that time period. So both options are available. We do have a couple of more options. There is one where we have an interest rate reduction of just 1% in the first year. And there is even another option this is a seller paid option, not available on lender paid, of a 321 buy down. So we're actually seeing a cost savings for 3 years instead of just 1 or 2. Actually seeing a cost savings of 3 years. So your first year is a full 3% lower in this scenario, 2.99%. Year two, 3.99%. Year three, 4.99%. Of course, those rates look amazing. Just understand that again, this is a seller paid option. And so you do have to have the seller contribute to that. And this is the cost of it. So may not be able to get that. Maybe you can, maybe you can't. You'll definitely probably have to raise your offer price in order for the seller to consider it. But it is another option that's on the table, the 321 buy down.
So, have you seen many of these with the 321 with that much needing to be contributed and the price increased? Because, of course, I'm thinking appraisal.
Yeah, of course. You have to keep an eye on the appraisal. Absolutely. It is a factor of structuring it this way. The only thing that I might add in response to that is because this market has been so tough that we've seen and houses are not moving. The comps really potentially could be there so that you could get that large of a seller credit towards it based on those prior sales. It's just that people are not making moves because in their mind the interest rates are not what they want them to be and that kind of thing. But yes, absolutely. It would have to appraise for that full amount that you might be increasing the price point for, or maybe you have a motivated seller that is just really needing to unload the house. Maybe they're relocating, maybe there was a death in the family, maybe there's a financial situation. And so they may be open to doing something like this so you could take advantage of it.
Okay.
Okay. And so that is really a pretty broad explanation of these programs. I know we've gone through a lot of information. If you have viewers that need to hit pause and rewind, hopefully that they can. So we've got all of these slides in here for them to take a look at. I do have my information here at the bottom if anyone wants to get in contact with me. But yes, yes, these options are definitely available. They're readily available right now. One would argue, like I said at the beginning of the call, that it is a good time to get into this market because you do definitely have some options there to get into those low interest rates still, at least temporarily.
Well, and the saying that I keep hearing is buy now with the lower prices and get next year's interest rate with the buy down. So
Yeah.
it's
Yeah,
kind
there's
of the
a
best of
term
both
that,
worlds because, as we've said before, once interest rates do start to come down, there are a bunch of buyers that have just been sitting on the sidelines waiting. And there
yeah,
are also a lot of sellers who need to also buy, but don't want to give up their 2.75 or 3.5% interest rate and
yeah.
buy with, a 6.5, 7, 7.5. So I feel like, and of course, supply and demand,
Yes,
you get more buyers in the market and inventory starts to go down, prices are definitely going to go up. That's
that's
what
right.
happened in
Yeah.
2020. So,
That's right. It's cyclical and it's inevitable, and you're 100% right. You and I are both veterans of this industry, and we've seen it all. Um, but absolutely. And so that, to me, again, this is just another reason why it's actually a good time for a buyer to get into the market.
yep. So, be sure to give Susan and or I be sure to give Susan and I a call. We both like to sit down and spend time with you to find out what your goals are and get the true big picture so that we can give you the information you need so that you can make the right decision for you and your family. Our contact info is on the next screen. Thank you so much for joining us. Please be sure to like, subscribe, and share, especially share with people you know that are considering buying a house.
Absolutely.
All
Thank
right.
you,
Have a
Pam.
great weekend, everybody.